Hey guys, it's Jonas Helbert with Streetlight Realty, and today I'm going to go over how you can actually purchase a home with little to no money down and actually get into home ownership, whether you got some savings or not. Now I usually kind of say this is like first-time home buyer talk, and that may or may not be the case for you. Maybe this is the second or third time you bought a home. A lot of these options are going to be available to either first-time home buyers or someone who's owned a home previously and now you're looking to get into home ownership again. So no one is really disqualified from any one of these products. There might be one or two that you can't have access to, either because of where you're buying or the type of status that you have for employment. But either way, there is an option for you to purchase a home with little to no money down, and we're going to go ahead and dive right into these. First, there's a couple of parts that make up the cost of purchasing a home. The two major expenses are going to be the down payment that you need to come up with, and then the closing cost associated with purchasing the home. In other words, paying the bank to process the deal, paying the title company, starting your escrow account, or funding your property insurance and your property taxes to make sure that those get paid. So there are fees associated with buying a home, but we're actually going to go over how you can eliminate those and get into home ownership fairly easily, really. And I'm going to go over all of these things, and then at the very end, I'm actually going to go through a real life example of what I was able to do for one of my buyers within the last year. So first off, let's go ahead and go over the different loan types. So there are four major types of loans that anyone could qualify for. The first two that are eligible for anyone would be a conventional or FHA loan. With a conventional loan, you can get into one of those programs for as little as 3% down. FHA, it's as little as 3.5% down. And then there's going to be a USDA loan, which is going to be limited to the geographical location where you're purchasing, but you can actually get into homeownership with zero money down on that front. So with that product, you only have to worry about how you're going to cover closing costs, and we'll get into that as well. Then there's also the VA loan, or loans that are only eligible for active military or veterans that meet certain requirements for that loan product. So that one's probably the most unique and most special as to who can qualify for it, but it is another 0% down option. Now, if you're thinking, well, I want to buy in an area that USDA is not approved and I'm not a veteran, but I don't have money, there's still going to be some options, and we're going to go over some down payment assistance program after we kind of do a quick rundown of these loan types. So again, we'll start with conventional. You can get into a conventional loan for as little as 3% down. Conventional loans are going to be appealing to people who have better credit scores. You may benefit from getting a better interest rate, which could lower the monthly payment for your mortgage. So there's a benefit there. Now, if you don't have the best credit in the world, you're kind of rebuilding credit, or you have some employment gaps or something like that, that might be a little bit of a hiccup, FHA is a great option, and for 0.5% more or 3.5%, you can still get into home ownership with very little down. So as an example, for a $100,000 purchase, you can do a conventional loan for 3% or $3,000, or you could buy a home at $100,000 using an FHA loan, and you would be putting down 3.5% or about $3,500. And then obviously VA, USDA, same example, you would actually not put anything down. So great options. I kind of went over the pros and cons. I don't want to get too thick into the woods about what separates a conventional loan from FHA loan and VA and USDA and all that. I will at some point, I'm sure, make a video explaining that, going into detail. So if you're interested, just check out the YouTube channel, and I'm sure at one time or another I will break that down. But for this video, we're just going to focus on what do you do if you don't have that much money or not much money at all. So we've covered the loan types. We now know you can either for a couple thousand or no money, you've got your down payment covered. But if you need down payment covered 100%. You're not a veteran. You want to buy, in the middle of the city. USDA is not going to be eligible in that area. There's still options. And so there's various different types of programs, and there's even some myths around that. Some people think you can only use down payment assistance programs during certain times of the year, and that is true for certain down payment assistance programs. They're only eligible a couple of months out of the year. I think Welcome Home is April, May, and there is limited funds, and they will exhaust. There are other loan programs that are offered through various times of the year, and they can be offered through different municipalities or other government-backed organizations. And with some of these, there are limited funds, and you have to move quick, and you have to be doing it during a certain time of year. If you have a real estate agent who has a good lending pool, in other words, a good network of mortgage loan originators that they work with, there will be programs that are going to be offered year-round, and some of those lenders may or may not be eligible for you in the area you're looking into. Fortunately, here in the state of Ohio, I do have a lender that actually offers down payment assistance program year-round anywhere in the state of Ohio. So again, if you need down payment assistance, you have it. So you can buy a home going conventional or FHA with little to no money down. And I'm talking about less than the 3 to 3.5%. Some of these programs, for instance, there's an FHA grant program that will cover 3% of the 3.5%. So in other words, if you were buying a $100,000 home, instead of needing $3,500, now you only need about $500. And again, I'm going to go over a real life example at the end of this video that will actually show you how I was able to do that for one of my actual buyers. This is not theory. This is something that we do for a lot of our buyers every year, year in, year out, month in, month out. So if you've been told recently that there is no down payment assistance program, we need to talk. We'll get you in touch with the right lender, and we'll get you all squared away on that, and we'll get you into home ownership. So once we've covered your down payment, and we've either mostly covered that or completely covered that for you, we still have to deal with closing cost. I'm going to go ahead and try to break that down again fairly quickly. We're not going to get into the minute details of every cost associated in the quote-unquote closing cost, but typically when we use this word, we're referring to the bank fees. In other words, the fees charged by the lender to simply process your loan. Then there's going to be starting up your escrow account. Most of the time when you don't put 20% down or more, you're going to be required by the lender to start what's known as an escrow account. This is an account. It's not a fee. It's not something you're being charged, but it is starting up the account to pay your property taxes and your homeowner's insurance on your behalf every year at no cost, but you do need to start it, so you will need some funds when you go to the closing table. Now, the bank does not actually process or close the deal. We use a title company. A title company does a variety of things. Not only are they the ones to handle the paperwork when you get to the closing table and actually try to settle the loan, or the deal, I should say, but they actually also make sure that everything's on the up and up and that the seller is indeed able to sell the property. They are the true owners and a bunch of that stuff. Again, probably make a video on that, but for now we're going to focus on the cost, how to get you into home ownership. And then there can be any litany of administrative fees, either to the brokerage, real estate agent, the bank or title company, what have you. So there's going to be some small fees. So now there are really two ways to go about covering your closing cost. On a deal, let's see, on a $100,000 loan, I would say closing cost could be anywhere from $3,500 to about $4,500, and it really depends on where you're buying, how much the property taxes are a year, how much your homeowner's insurance is going to be every year, whether you get title insurance, whether you don't. Again, we'll eventually make a video going over that, but I'll give you a real-world example at the end of this so you can really understand what you could buy and for how little you would need out of pocket. So the two ways to handle your closing costs are relatively simple. Well, I guess technically there's three ways. You can pay it, you can ask the seller to pay it, or technically you can have the seller pay a portion of it, or if you really need to make sure that every dollar is accounted for because you only have so much to purchase a home, and say this seller's not willing to cover it, there is something, if you work with a great lender, called premium pricing. In other words, you just kind of play with the interest rate just a little bit, spit some money out, and actually cover your closing cost. So it's a great way to be able to get into home ownership, get the home that you really want, even if the seller is unwilling or unable to help you with any type of closing cost assistance. So I've mentioned it a couple times, but I said I was going to go over a real world example of a deal that I did recently. One that always stands out in my mind because it was such a cool home was one I actually did last July. The purchase price was $214,700, and I was able to secure my buyer a grant for $8,432. I was able to get the seller to pay $4,800 in closing cost, and that equals up, check this out, he was able to get $13,232 given to him either through grant money or directly from the seller. What this ended up doing was, once he got to the closing table to get the keys to fork over all that money everyone always talks about, he had to bring a check, forget this, $109.01. That's right. My buyer had to bring $109.01 to purchase an almost $215,000 home. So anyone who says you need a lot of money to purchase a home simply doesn't know what they're talking about. I hate to say it that way, but that's just the truth. Now, there are some things along the way that was able to bring that down, right? So great negotiating. We were able to get him with a knowledgeable lender who had great down payment assistance program. And now he did put $500 down in earnest money. So his true out-of-pocket expense was $609.01. But I think anybody would agree that to buy a $215,000 home, to only bring $609.01 is a pretty darn great deal. We did this, like I said, it was last July. This is the one that stood out. So I quickly pulled it up and ran the numbers from the settlement sheet to have this prepared for today. And then the only thing that I haven't covered is an inspection. So $609.01, that's what the true cost of buying the home. Now, an optional expense to my buyer was the home inspection. I believe his home inspection on that was either $450, $475. It was under $500. So if you truly want to know how much it was to purchase this $215,000 home, it was right around $1,000, $1,100, whatever you want to do. Home inspections are optional. I'll say it now, and I'm going to do a separate video about home inspections, but never purchase a home without doing a home inspection. Even though it's optional, you should always do it. It's going to be good for you. I've had clients literally be saved from incurring $15,000 to $20,000 worth of issues by paying a couple $100. So don't view the home inspection as an expense. It's a tool that you use to save you money before you even acquire a home. So a couple points I want to highlight. It is possible for anyone to purchase a home with little to no money down. This home, for example, was as high as $215,000, and my buyer was able to get this home for just under $610. If you would like to learn how we can help you purchase a home with little to no money down, feel free to reach out to us. My email is Jonas, Jonas, at Streetlight, traditional spelling, realtors.com. So Jonas at streetlightrealtors.com. Feel free to give me a call. My direct number, my cell phone is 937 626-4181. You can give me a call. You can send me a text message. Doesn't matter. We'll make sure we respond. Find us on Facebook, Instagram, Twitter. We're on all social media. So whatever your favorite method of communication is, reach out to us. We're available. We're not hard to find. But yeah, we'd love to talk to you and how we can help you out in your situation. If you think this video was valuable, do me a favor and subscribe to the channel, like the video, and if you could, share it with your friends. Thanks and have a great day.